Today is Tuesday, December 8th, and today's topic is a 30-year mortgage straight from the devil. Satan, Lucifer, George Bush 1 and 2. Hey fam, today we're going to talk about why a 30-year mortgage is from Satan. A 30-year mortgage is just not worth it, and we got proof and I'm going to show you why. Now, people have been led for years to believe a 30-year mortgage is the thing to do. It's the American dream. Owning a house of your own, but it's not. In fact, it's possibly the worst thing you could do in your life. But then again, it was this girlfriend. A 30-year mortgage is guaranteed to rob you of your retirement. Now, even if you don't have a 30-year mortgage, I want you to pay attention to this because we're going to be talking about compound interest, and you'll be able to see how it works and what goes on with the banks. And of course, as always, please tell a friend. So we're going to talk about how to figure out interest on a mortgage loan. You know how you have those churches out there where you can go to be baptized when you're a baby, and then years later when you're taking your baby to be baptized, they still got the same building fund. Are we gonna keep passing the plate? Did we get it right? We're gonna have ourselves a fish sale, a chicken sale, a bake sale. We're gonna get this 30-year mortgage off of our backs. It's a sin. See, what it is a 30-year mortgage is designed to pay the bank back first, which leaves you stuck for the rest of those years. Now, let's say you got a $100,000 house. Can we say foreclosure sale? Foreclosure sale. At 9% for 30 years. Now, let's just go ahead and break down the math right quick. For that first month's payment, out of that $100,000, you got 9%, so that's $9,000. We're going to take that $9,000 and divide it by 12 to get your payment as far as the interest, and that's $750. Now, if your payment is $805 and your interest payment is $750, that really means that you paid $55 towards the balance on your house. The rest of it went to the bank. Now, what happens in month 2? The exact same thing. Hold up, this is becoming a terrible pattern from the beginning. Let's look at a breakdown of your paying for this house at this 9% 30-year loan over 4 months. As you can see, 93% of that money is going towards the bank. And after 4 monthly payments of $805, you've paid $3,220 total, but you've only paid down your house $222.65. Now, if you're like me, you need pictures to get an understanding of what's going on. So the percent of monthly payment that goes to interest by a 30-year loan, let's even look at just 7%. Ooh, that looks like a hill I wouldn't even want to ski down. All that money's just going straight to the bank. But of course, they're always saying when you get a house and you put money into your house, it's equity. You're getting the equity. Well, let's break down the equity. So the 7% loan, 30-year, 22 years into this loan, you're at 50%. 22 years before you're even at 50%, so you've paid all this money to get to $50,000? So let's do a quick comparison. Let's look at paying down that $100,000, but you're using a 15-year mortgage at that 9%. $207 each month ends up saving you $107,417. Let's break it all down. A 30-year mortgage seems attractive because you get lower payments. But oh, the devil is in the details, because then you owe for 15 years more, paying over $100,000. Now, what you can do, if you have a 30-year mortgage, you can go ahead and start paying it like you have a 15-year mortgage, just adding more to your payments every month, and that way you have a little cushion. If something goes wrong one month, you can just say, oh, okay, let me go ahead back to my 30-year rate, and then the next month get back on track. And as always, if this makes sense to you, please go ahead and send this off to your family, your friends, that coworker you don't like, so maybe they can get a real life after they have some money saved up. Children, if you got a 30-year mortgage, we gonna come over to your house and lay hands and get the devil out of ya. I'm saying I'm a sign of my